Hey everybody, Geoff Hyland with the Hyland Group, eXp Realty in Prescott, Arizona with your March 2026 market update. Everybody's been asking, hey Geoff, whether you're a buyer or a seller, is now really a good time? I've got some sellers that are kind of on the fence right now. We were ready to go on the market and they came to me and said, hey, in light of what's going on in Iran with gas prices and uncertainty in the market and the jobs report that recently came out, is now the best time? We're gonna get there, but before we do, I wanna give you some foundational information to consider first. So let's dive into the numbers. First of all, demand for the month of February, 266 site-built single-family homes went under contract. That is up 20% from February 2025's numbers. So we're still seeing a sharp increase. That's 2 months in a row. January and February numbers were higher by 20%, 23% from the year prior. So buyers are off the sidelines. Why is that? We talked about it last month. It's because interest rates, and I know they've gone up a little bit since February 28th and the Iran conflict starting, but we are still looking at interest rates about 6.2, 6.15%. It's been vacillating a little bit there. That's 3-year lows in terms of our interest rates. So yes, interest rates have gone up a little bit. We saw 6%, 5.99 for a brief moment there, but then when the Iran conflict started, it did go up. And I realized that your gas prices did as well. Sounds like most experts are saying that's not going to be a long-term thing, but we'll keep you posted on that as it unfolds. So 266 pending sales for the month of February, and March 1st, 948 active properties on the market. Again, site-built single-family homes. Now, it's March 11th as I'm filming this video for you. So let me give you a little bit of an update. So 948 homes as of the 1st of March. As of today, 935. That number is going down, not up. Why? Because from near as I can tell, the demand is staying strong. As of March 11th, 123 homes have already gone under contract this month, which puts us right on pace, if not ahead of where we were for March of last year. So it's been a couple of weeks now since this Iran conflict. Things are starting to settle in a little bit. I mean, we've got a little bit of data here from the past couple of weeks, and so far I cannot see anything discernible in the market to report to you, whether you're a buyer or a seller, that it should really have any impact. As far as days on market is concerned, Prescott's days on market was 86, MLS wide 83 days is our days on market. So those numbers have even come down a little bit from January. And as far as the active inventory, those numbers are painting a little bit different picture. 123 days on market is the average of all those homes that are on the market. They've been languishing for 123 days, and they are now 14% over the average price per square foot. So nothing new to report there. If you're overpriced, if you're not in good condition, then buyers are more picky than they have been and have more options to look at. And so you're probably going to be sitting on the market there. If you look big picture, MLS wide in terms of values over the last 12 months, we're within 0.3% of where the values have changed MLS wide. So we see some bumps and ups and downs. We talked about the luxury market. Congratulations, by the way, Prescott was announced. We made the Wall Street Journal top 10 luxury market in the nation. So I think we talked about that last month, but pretty cool to see that as well. So really, when you take the average over the last 12 months, values are not changing. So let's talk about this. We had a jobs report come out on the 6th of March. Wasn't a real pretty picture. Let's see what some of the experts are saying. Zillow's saying that the housing market is stabilizing, but there's downside risk because of job confidence drives decisions just as much as interest rates do. It says even if rates ease a bit, households need to feel secure enough to buy, list, or move. Why the job report matters for real estate? Well, when job growth looks softer, people pause. Renters renew instead of buying. Buyers wait for certainty, and sellers hold off on listing. That's some of the hesitation that we just talked about, and I've been getting those phone calls. I think here's the key point. It's not showing up in our market right now. So if you're a buyer, hey, there's gonna be, you've got attractive rates that we haven't seen in nearly 3 years. You've got great inventory selections, and there are some sellers that have been languishing on the market for a bit that would welcome your offer, as well as concessions. Again, Freddie Mac reporting 30-year fixed rate about 6%, close to the lowest since 2022. So affordability is better than it was. Last point on the Iran conflict is Redfin reporting that the Iran conflict and oil price inflation concerns currently overpowering normal economic signals. So mortgage rates may not react the way they usually would after the recent jobs report. So the jobs report recently would, outside of any of this geopolitical macroeconomic stuff, ordinarily what we would see is after that jobs report get published, the interest rates would be coming down. The reason that they're up is because of some of the uncertainty in the geopolitical realm. The good news is that, when we started at 6%, and yes, the rates have gone up to 6.2, it's not like where we were a year ago at 7 and now they're at 7.25. So I think that the overall market, what I'm seeing is stability, 4.7 months supply. If you're that buyer, if you see a home that you like, go buy it. If you're that seller and you want to sell, here's the good news. If you look at the charts at all that we publish, the survey says inventory will be increasing as we go further into the spring and summer months. If you have any questions about what's right for you, please feel free to reach out and contact us at any time. And hey, by the way, if you like this content, would you do me a huge favor and just hit that subscribe button for me? We look forward to seeing you on the next video. Thanks a lot.